Hi there, welcome to Grain TV. It's Friday, January 13th, and a meager gain in the grains. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn continuing to fractionally inch higher, gaining a quarter-cent a bushel today. Beans up 4, although front month March had been trading as high as 10.53 before backing off to 10.44 on the close. And wheat in Chicago also showing fractional gains. Really, it just sort of felt like a continued follow-through of short covering after yesterday's surprise on soybeans. No real news out today. We do have the long 3-day weekend to come back to on Tuesday and digest what the South American weather looks like. But so far, going into the weekend, the expectations are that we're going to see drying over the next few weeks in Argentina. We're going to see some beneficial rains in the dry parts of Brazil. So overall, it continues to be fairly supportive for good growing conditions. Also on the weather card is expectations of the plains area really starting to see some good moisture, 1 to 3 inches called for in Texas, Oklahoma, Kansas over the weekend. So that is certainly supportive for the wheat crop, which has seen really dry conditions or droughty conditions in that those southern tier states. Other news out today, we did have USDA give us a flash sale for soybeans, the first time since December 23rd, coming in at 132,000 metric tons to unknown destinations, but in all likelihood going to China. Let's switch gears and talk about basis. You know, we came into the first of the year with what we thought was going to be sort of some weakening basis, and we started to see it certainly in corn and a little bit in beans. And I think with the follow-through action in beans, we're going to see more follow-through declines in basis. But let's start first of all with corn. This week, corn basis overall around the country was pretty much unchanged, but we did see some weakness continuing along the river markets. In blue here, these are river markets in Iowa and Illinois. You can see we traded as high as almost -3 under the March contract, and we're back down to around -7 under the March for 2 weeks in a row of losses. Ethanol plants have remained fairly stable, drifting a little bit lower, a little bit weaker here in the first of the year. Looking for the rest of the 2-month period here between now and spring, you know, I would expect a little bit of a higher tick up as farmer sales start to slow a little bit after we get past the start of the year. But overall, this is a market that I don't think is going to have much legs to the upside because farmer stockpiles are exceptionally large. We saw that in the quarterly stocks number. Farmers are sitting on 62% of the stocks on hand in their December 1 carryout. And so overall, you know, farmers have got a lot of grain still left to sell, especially in the case of corn where they've held fairly tight because there has been limited futures rally. In beans, you know, we saw a backtick in the basis for the river terminals again this week. Again, I think you know, the slowing export program, the strength in the bean market here in the last few weeks, you know, giving us this pop in the last few days of over 30 cents a bushel, I think is going to, you know, convince some farmers to let go of some more beans as we come back to trading next week. We're starting to see a little bit of basis drift lower here on Friday as well, and I think it'll probably have more follow through into next week. Crushing plants have remained fairly stable here the last few weeks. You know, again, I don't think they're going to be worrying too hard about competing for beans with the price market or the price action giving them some added leverage here. So pipeline supplies are not an issue right now, and especially not so in the case of corn. We talked to a lot of farmers who are still sitting on a lot of old crop corn left to sell, and I think it's going to be an ongoing struggle between now and spring. Let's take a look at the new crop price situation. We've been talking about, you know, what traders are looking for in terms of soybean acreage increases. Early on, you know, people were calling for 3 to 5 million acre increases. I think, you know, with the latest wheat acreage number coming in about 1.6 below expectations, you know, we're expecting another 4 to 6 million acres of beans next year. And I don't think that's out of the realm of possibility given the price ratios we're seeing in new crop Dees corn versus November beans. If we look historically in the month of January for this new crop delivery period, what we can see is that now where we're trading today at 2.65 soybean relative to corn price, that is historically large. go back to 2000, go back 17 years here, you can see we've never been this high in January. And when you look at the previous 3 years highs in 2004 and 2006 and most recently in 2014, you can see the acreage increases in beans in green on this chart: 2.2, 3, and 4.4 million acres. So I think, given the significance of this price ratio being at 2.65 compared to history, given the negative situation in wheat and corn, I think it's not out of the realm of possibility to see the upper end of those estimates come true with 5 to 6 million acres of beans being planted. And if so, how big is the ballgame going to change once that happens? I think farmers really need to start paying attention. We've got crop insurance not covering us until we get to the end of February based on price action in the month of February. So I think now may be the critical time to be making some pricing decisions on your new crop beans. Speaking of new crop beans, let's take a look at the trade action here and where we're at. We closed just below 1020. We traded as high as 1022 today. The upper end of this range is 1043. We're not far from that now, so I know everyone wants to try and hit the top, but I'm not sure we're going to make it there on the back of this modification to the supply and demand table, or the drop in soybean production. I just don't know that we've got enough steam. We'll see come back Tuesday, but it felt a little shaky going into the last hour of trade today. Certainly the morning session, starting in the morning bell, we traded higher for a good 2.5 hours, but the last hour of trade just really felt shaky. Didn't feel any sort of carry over strength to test the highs of the day. So I'm worried that when we come back next week, we may find ourselves moving lower, drifting lower, and these 1020 prices that we're at now on new crop delivery may be problematic. In terms of cash prices, a lot of elevators are quoting $10 off of this 1020 futures. We got the messages, I'm sure you did too as a farmer out there. $10 is a good place to certainly do some pricing here, I think, in light of the fundamentals we have shaping up for 2017. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainedge.com. Have a great weekend. We'll talk to you on Tuesday after the Martin Luther King holiday.